Good morning, it's Thursday, June 19th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So U.S. equity futures, they are a bit lower here in the overnight session due to the ongoing conflict in the Middle East, and the Federal Reserve is reluctant to cut interest rate. That's both impacting the markets here. And U.S. stocks, individual stocks, they are closed, as well as the bond market for the Juneteenth holiday. The futures, they do continue to trade. And with the flow of geopolitical news, this is the key reason why you want to consider having a futures trading account, at least as a backup if something was to occur. If geopolitical risks were really starting to get elevated here, we could see equity futures continue to move lower. We could see gold futures rise. And frankly, with a stock account, you just can't position yourself for that. So if you're interested in opening up a futures trading account, please send an email to info@bluelinefutures.com or call the trade desk. So breaking down, I got a lot of questions surrounding the Federal Reserve and then also what happened to the gold market, what happened to silver, and what happened to the stock market here, especially into the after hours yesterday. So basically, as widely expected, the Federal Reserve, they maintained the 4.25% to 4.5% range for the fourth straight meeting. The key point in the statement was that the economic uncertainty, the outlook had diminished. So it does remain elevated. So uncertainty is starting to come down a bit. The equities, they push up and you get a risk on type environment. You get the dollar index coming off, you get gold futures starting to rise, you get silver futures making their highs on the session. So what happens is that you get a couple more data points and a couple more topics of discussion out of Chairman Powell, and the market starts to move on it. So he notes that the current policy is well positioned to respond to developments while trade and fiscal policies continue to evolve. So the Fed is prepared to remain patient. So the market starts to rethink its rally. So then he starts to talk about tariffs represent a second acknowledgement of uncertainty regarding the size, the amount, and the duration of the peak seen in April. Remember, April was when we had the worst part of the tariffs. We had the most uncertainty, and the markets hate uncertainty. That's when we dove. He said that those uncertainties with regards to tariffs, they are diminishing as well. They're declining. So the market moves and it makes a new high. So that's when you get another risk on silver, copper, gold. You get the stock futures pushing up and double top at the high of the session yesterday. The problem is that he says that regarding the labor market conditions, they are continuing to be at healthy levels. However, there are many signs of a very slow and continued cooling. Despite this, the situation is likely not severe enough to warrant any policy action, and that the economy remains on solid ground. So the market dives. It is the fact that he is not going to cut interest rates anytime soon. The market starts to sell off. So then what you do is you look at the median of summary of economic projections. That's what's called the dot plot. Basically what it showed was 2 interest rate cuts in 2025, and then you also have 2 interest rate cuts in 2026. What they did was they took out one of those interest rate cuts, and what happens is the terminal rate, that's the most important, that's where the Fed stops cutting rates. That rises from 3.125% to 3.375%. So what happens is the destination, the final destination for them cutting rates, that changed. And the markets had to change in response. So simply put, you were supposed to go on vacation to Disney World. Now your family's taking you to the carnival instead. You were supposed to go to the beach down in Florida. Now they're taking you to grandma's lake house instead. The market does not like that, so it readjusts. Now you look at the overnight action, S&P down 30, NASDAQ down 135, Russell down 20. You get gold futures dipping below 3,400, but still holding this range. You get silver futures, which broke out to the upside, couldn't get that follow through and that liftoff, coming back down and retesting in the support zone. That was this flag. You have a pennant formation, market breaks out of the bullish flag, and then what's it do? It retests back down, and that's where we're sitting at right now. You got platinum futures a bit lower. You got copper futures a bit lower too. You got crude oil futures up about $1 here at 74.40. You get Bitcoin futures rallying about $1,000. Bitcoin is really the risk on play if you get this war effort declining. You'll also see U.S. equities see a relief rally, and you'll see some of that premium come out of the crude oil market, out of the gold market, and things like that. You look at the ETF flows, the exchange traded funds, they continue to add about 95,000 troy ounces of gold in the previous holdings. So that's the 5th straight day of growth, the longest winning streak since April 2021. You get the ETFs cutting about 1.42 million ounces of silver from the last trading session here, and then you get platinum holdings decreasing. So as platinum goes up, you're having people slowly harvest the profits from that move higher, and are looking at deploying that capital elsewhere. So it is a 0.2% increase on the year-to-date percentage change on platinum, and it's another decline of about 1%. So you're seeing continued outflows out of the platinum market, and it's correcting here in the overnight market. Now, something to give you guys some insights on kind of how I function here, or one of my processes. I really love the Worldwide Exchange. That's what I watch on CNBC. I'll be on that program tomorrow morning at about 5:15 Central Time. I'll be on there. I'm sorry, 4:15 Central Time, 5:15 Eastern Time. But what I'll do is I'll flip to the Weather Channel after that. And why do I do that? Well, the winter wheat crop, the USDA reported on Monday that winter wheat harvest is only 10% complete, compared to 25% normally at this time. You look at wheat futures yesterday, up about 4.5%, big breakout on the chart. They are getting significant rainfall in Nebraska and Kansas, and what it's doing is it's already hitting what is waterlogged fields, and they're unable to harvest. The second thing that I watch is the Straits of Hormuz. Because of the radar jamming that's occurring, you've had some ships collide with each other, slowing the process of things moving through. It's not only oil that moves through the Straits of Hormuz, you have about 11% of international trade in agricultural products also travel through that region and use that as a shipping point as well. So any kind of breakdown in there, you could see wheat prices continue to respond higher. So that's another market on my radar. But if you guys got any questions, great day to open up a futures trading account. Shoot an email to info@bluelinefutures.com. And remember, futures and option trading does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.